Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are taking a look at Texas Instruments, ticker TXN. This is another stock where I'm scrolling through my portfolio. I only hold about 2.5 shares of this, but I'm up 45% on my position, and I need to look, is this something that's worth holding on to? Should I sell it, use the cash elsewhere? Because I have over $100 in profits off capital gains alone that I'm just sitting on. So we can look through the financials. This one I figured was a little different. It's definitely not a value play. Last year's fair value was 151, share price of 165. So it trades at a premium. So I worked in a whole new section of our sheet where I run a discounted cash flows model to see what the fair value of more of a growth stock would be. And for that metric, I'm coming up with a decent value right now for the stock of $169.66, which is a little below where it currently sits. That is based off of them continuing on trend with their free cash flow. And the fact that they're looking at a decrease in both revenue and earnings, just like Merck, that means it might be time for me to look at getting out. If it were a value play, I'd be wanting to sell out at 150 to 160. Well, it's sitting at 172 right now. So I'm leaning towards getting out of the stock. We can see that they've been okay at buying back shares. They had good growth, 11% top line, 20% earnings. They were decreasing their expenses as a portion of their revenue, but the whole chip market is kind of in trouble right now. So I almost want to take my gains and wait for that turmoil to finish and see what the market share of all the different companies are at the end of that, and then reevaluate and get back in, because I think there might still be some downside to those. But just the key metrics that we look at, their gross margin, very good. Net margin, very good. ROE, very good. Typical growth is good. And they're buying back shares. They're actually increasing their tangible assets. They have a positive tangible book value. So the more I look into the fundamentals of this company, I almost want to hold on, or at least sell out now and buy back in the coming months, because they already lowered their guidance for next quarter, and they came in well below on this quarter. So they're going to have a pretty rough year. Based on my calculations, personally, I'd be willing to buy it as of last year, $180. As of this year, $154. Because I only have 2 shares, I'm definitely leaning towards selling out and using the money that I free up elsewhere in my portfolio, so we can get more of a value company rather than just a company that we're holding on to. We're hoping for a turnaround. Now we can take a look at the chart and see what is going on here. Again, I only own those 2 shares. I bought them back in 2020. March of 2020 was the first time I bought. So of course, anything back at that time, you're probably up on. That was just the value investor's dream, because even the end of 2019 financials, it had a fair value of $105. The end of 2020, $113. And right around that point is where I bought the stock. I bought it around $110. And then we see it bounced right back. 2021, we saw $141, then $151, and now it's going back down to the 140s. So in the short term, it looks like the company's kind of peaked. I don't really condone trading where you're just like hopping in and out of stocks, but I'm really trying to condense my portfolio. This is a small position. I have massive gains on it. So it'll definitely be one I keep my eye on, but I'll probably pull my money out. We see off that 2020 bottom, it just had a nice trend that it rode up all the way until late 2021, and then it's kind of been trading in a range between 160 and 185 ever since. If I were to graph that trend, I don't even get a good downtrend here. I don't think it's on much of an uptrend. It's kind of hit its potential and is trading sideways. So until it breaks down below this 160, I'm not sure that I'm really interested in the stock. I have in the past made a bit of money off call credit spreads off this one. Would be around $115 based off of the forward financials for 2023. And then we'll have to see how things go from there. Analysts are expecting them to grow their earnings per share again back into the $8 range come 2024. And if they continue buying back shares, the real question is going to be this free cash flow. If they can keep, they have been a little all over the place, 40, 38, 34, 29. So the fact that that's falling, the amount of free cash flow as a proportion of the revenue, not really a good sign. I mean, if we were to look at it as just growth in the free cash flow and see, if they were to come on trend with their growth of their 3-year CAGR, what that would be and how that might affect things. So they're looking at 0.7% growth year over year in their free cash flows. Yeah, that dropped it down. That gives us a fair value. It dropped $2 off the buy zone and didn't have too much of an effect on the discounted cash flows, maybe a few cents. But that's where I'm sitting on this stock. The chart looks fairly similar to Merck's, especially in when I bought and how it just went on a huge run and finally broke out of that trend, kind of sideways and down. So this is what I'm going through my portfolio. I'm looking for stocks like this, stuff it's expecting declines this year. I've wrote it up to its fair value, and I'm ready to deploy the cash into something more productive rather than something that's just trading in a bounded range. But that's all for this one. I want to thank you guys for watching. Like if you enjoyed the video, comment if you want a stock, or if you have a stock that you want me to take a look at, or you disagree with me. I want to know where you think that I might be wrong on this stock. Subscribe if you want to see more, and I'll catch you guys next time.